morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Moneyfarm, Giovanni Daprà. Welcome.
Welcome, great to be here.
Lovely. So before we get cracking, let's learn a little bit more about Moneyfarm. So Giovanni, tell us more about Moneyfarm. What do you do? How do you do it?
So Moneyfarm is a digital wealth manager. So we help people manage their saving, and we are an online platform that works in Italy and the UK. We have been around for about 10 years, and our mission is to really make finance more simple and accessible. And we manage now about 2.6 billion pounds, and we continue to really take care of saving for people, which we think is one of the most important things in life.
And I see your assets under management have been growing quite nicely, quite steadily. I'm just wondering how that has changed over the last 12 months, because of course we've seen inflation rocketing, we've seen interest rates rise. Have people been more inclined to just put their money in the bank and get interest, or are they more inclined to invest to try to outpace inflation, if you like?
I think that at the beginning the allure of fixed rate deposit was quite big. So of course people haven't seen this kind of rates in a long time. So being able to have 2, 3, 4% with the, I would say, less risk, but then people start to realize that that is not a long-term solution, because if you really want to beat inflation, you have to get into high-yielding assets, and then particularly equities in most of the time. So it's fundamentally important to go back to the capital markets, and I think that now that the world has repriced, if you will, the expected return for a diversified portfolio has increased substantially. So we're seeing a lot of more people coming back, and we always have positive flows. So it's just a question of the rate and the willingness of people to invest in any precise amount of time. And we also saw, given the recent event, that leaving money in a bank might not necessarily be the safest option.
Although, of course, no depositors have lost any money, so perhaps they'll also be reassured at the same time. But of course, you've also, Moneyfarm, partnered with a number of, let's call them legacy and also new age investment companies, including M&G, Saxo, eToro and Allianz. Was this always the strategy, and what more can we expect from partnerships with Moneyfarm going forward?
So ultimately, what we do well is manage customer money and providing the technology and operative model to do that. This is our core DNA, is what we like, is what we get energized for when we wake up in the morning. Whether those customers sit directly into Moneyfarm or they are through a partner, for me it doesn't really matter to a degree, in a sense that ultimately the benefit of the product and the operative model we provide can reach a broader audience if you work with partners that has established distribution network. So we started that in 2018, so quite a while ago, and we actually see it as a very positive development that support also our direct consumer business.
And many of your partners like M&G, big pension and fund manager in the UK, are also strategic investors. In your last funding round, I think you raised £44 million at a reported £300 to £350 million valuation. Have you now raised enough to get you to profitability? And if so, when will that be, if of course you haven't already got there?
So we had raised enough. I think that the profitability versus growth is an equation you need to balance, and the appetite towards that changes over time. So we're still in a growth mode. We try not to err on one side or the other, taking but the Nasdaq performance of the last few weeks. So the key point is that, are we on a projected and credible path to profitability? Yes. Are we getting there? And then we look at it every week to see whether we are really there. Can we accelerate growth? Do we have more leeway to accelerate growth, or should we pull down in order to achieve profitability faster? And I think that we create ourselves a timeline, which is what us and the board are comfortable on, and we want to stick with that. Of course, you have to adjust given that the market condition changes quite rapidly, but we are funded to achieve that.
Can you share what that timeline is?
We're talking about 12 to 18 months max. I think it's really depends. As I said, it's depend on balance of where do we wanna go there, and I think that the key point is really can you get there, and then you can decide what to do.
Okay, so we've heard about Moneyfarm. Let's now get to know Giovanni a little bit better. So Giovanni, you're Italian, but I think you studied in Australia and the UK, and you also worked for a German bank. I'm wondering what are the best and worst traits that you've picked up from those countries or those cultures where you've been studying and working?
I would say each culture has a different attitude towards some stuff. I think Italians are incredibly commercial and pragmatic, and I do think that sometimes, for instance, the Brits doesn't share the level of pragmatism and ability to get things done. On the other side, UK is a very compliant culture, which helps provide order and balance compared to the Italian, let's say, more messy way of doing things. So in the end of the day, the process is better in the UK. I would say that Australia, the most interesting thing about Australia was the level of easiness and an approach to life, which was, I think, given very, very refreshing compared to Europe, which seems to be very weighted down by our history and problems and legacies and everything else. And then, I mean, within Europe, there are very, very different cultures. I think we work a lot with the Germans also because Allianz is one of our largest shareholders, so I have a lot of, again, respect for the way they were able to, what they could achieve economically and socially compared to maybe Italy, which has been a bit of a laggard versus them, I guess, all other European countries really. So there are pros and cons, I think, in each of them. So it's difficult to always generalize, but there are differences that you have to take into consideration when you build a business.
And of course, before you co-founded Moneyfarm, you had a promising career in banking. You seem to emerge from the global financial crisis, if not unscathed, then at least still with the same job. So why did you leave kind of job security and what I assume was a decent paycheck to go it alone? What was the appeal?
Yeah, I think that the reality is that, so I spent in banking from 2005 to 2010. I always said that in 5 years I can do so 50 years of financial markets because of what happened during those 5 years. And I think for me it was really clear that the industry was going to at least being of a stagnant period for 10, 15 years. I was 27, 28 at the time. I really didn't want to be in a place that didn't expect growth, and I think that in life you really have to find yourself in places where growth happens, because otherwise as a person you won't really benefit as much. So I love technology. I think I've always been passionate about technology, and I love financial market. I mean, I'm a finance person. I don't define myself as a technologist, but I do really like technology, and I think combining the two seems like a good opportunity. I could have done an MBA, as many of my peers did, but I always wanted to try to build something for myself, so I decided to leave and start at Moneyfarm.
And you say you're a financial person. I understand you're also a bit of a musical person. Tell us more about that.
Yeah, so I've been playing a lot all my life, various instruments, and I think it's always a way to get energy and I would say understand that there is more in life than just the business.
And I think it's piano and drums are your two main things. Is there a particular piece that's your favourite that perhaps gives you that inspires you to kind of make Moneyfarm great?
If you go into the depth of some of the pieces that were written, and I'm now mainly talking about classical music, I don't know, say take the Goldberg variation, really understand how the level of perfection and works can go to a level of details and depth that sometimes in business you cannot do because you just don't have the time to achieve that, and I think that's a completely different craft.
Okay, so a key part of this interview is to get your take on the future of finance, but first, We are going to take a very quick break, after which we're going to continue our conversation with Moneyfarm co-founder and CEO Giovanni Daprà. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, now Giovanni, let's talk about the future of finance. Okay, so I'm going to start talking about artificial intelligence, AI. A lot of it in the news. It's kind of like the buzziest subset of technology right now in 2023. Is it ever going to get so good that investors will finally clamour for robo-advising because it's just so much better than whether it's passive funds or passive investing or actively managed funds?
So I think that AI it's a fundamental tool, and I do think that finance people always think about finance to the kind of tip of the iceberg. So I don't know, decision on a portfolios, whether I should buy one thing or the other. But in reality, 95% of the stuff in finance that happens is to actually serve the customer, whether it's back office, call center, ability to answer a question effectively, provide reassurance. So even if I look at my company, our business is investment management, and yet we have probably 10% of the people that actually do investment management. The other 90% is making sure that happens and get delivered successfully to the customer. So I see AI playing a huge important role in that, and ultimately the expectation from the customer to get a very precise answer in a matter of seconds will be compounded by AI. So I do think that it will be quite transformational for particularly for us, which is customer-facing businesses.
But that's, if I understand correctly, that's more on the technology side, customer service side, and less on the kind of having AI choose investments that are almost guaranteed to,
Yes.
give a good return. Okay. And of course, at the institutional level, we've seen hedge funds like Jim Simons' Renaissance Technologies use algorithms to consistently beat the markets. Although, I guess, as you've just said, AI will be more on the kind of non-investment side of things. But do you see a day when, maybe it's 10 years, 20 years, 50 years, I don't know, when you'll be able to offer that kind of power to individual investors?
So the problem is that winning the market are a zero-sum game, right? So if you have Renaissance, which is probably 10, 15 years ahead of everybody else, and you don't have the resources to compete, you're going to end up losing. So because it's a zero-sum game and because of the structure of the market, I don't think retail should play in that game. Is like not playing in that game is the best thing you can do to get the best of your return, because if you go into that game, even if you have the best AI in the world, but that is commoditized, if the moment it gets to you, it means that probably Jim Simmons as the next best thing. So it's kind of, you're never gonna catch them. So you're much better off not playing in the game, focus on cost, focus on diversification, and lead them, let's say, kill the other guys in the room.
I'm glad you said that, because staying out of that particular game hasn't prevented investment platforms enabling individual investors to play in other games that traditionally they haven't been. And there's been a lot of talk about, quote unquote, democratizing investing, enabling individuals, for example, to put money into options, or SPACs were touted as being a way to democratize investment, and even securities lending. Clearly the democratizing moniker is a little bit self-serving, if we're being charitable, but how much or more or less should investors be able to do? Should they, for example, not be allowed to invest in options? Should SPACs not have been open to individual investors? Where should the line be drawn?
So I've never liked the term democratizing. You have to be honest, even though if Moneyfarm, to a degree, it does that because it helps some strategies to the retail. The reality for me is that since I was in banking really in 2005-6, the key point was if you have a new tool and you can give it access to people will use it, whether it's a derivative, whether it's a CDO Square, whether it's whatever it is, the funky instrument you can build up. People will try and play with it, but the vast majority of time you should stay away, in my opinion, and really focus on your long-term strategy. There are some good things about democratization, for instance, private assets, so the ability to have access to sources of return path that you wouldn't have traditionally have been able to buy, but it's not an option. It's liquidity premium. It's other things that are actual sources or tested sources of return that you should have access to that you can't. It's not about the instrument, it's not about the how, but it's about what actual return are you gonna be able to be exposed to. So it's really a double-edged sword in my opinion, and I don't think that the free-for-all model, the circus of the meme stock actually does anything that is positive for long-term wealth accumulation and creation, which is our game as people. We need to be able to retire comfortably, maybe pay kids education, maybe pay our houses, I don't know, whatever you want to do, but the reality is about a long-term wealth accumulation game. It's not about trading.
Right. And right now, certainly in 2023, one of the other big things, in addition to AI that everyone's been looking at, certainly in the finance space, is what's been going on in the banking sector. You were at Deutsche Bank during the financial crisis. Does the current situation where we've seen collapses of Silicon Valley Bank, Signature Bank, First Republic Bank, and perhaps others, does that bring back unhappy memories, or is the situation we've seen in 2023 far, far removed from what happened in 2008, 2009?
Yeah, I'm gonna steal a quote from Charlie Munger. The reality is that it's very difficult to run properly a bank because you have a lot of temptation, and the interest rate sub-zero for 10 years is a very big temptation. And I think that the regulator was late, but that's structurally the case. They're always late. We've seen it in crypto, they were late. In banking, they were late. In 2008, they were late. It's just, they will always be late. So it's up to the management, and I think sometimes the dumbest mistake are the more they're gonna kill you, like interest rates. Interest rate risk is probably, if you go in one-on-one finance course, is what they teach you as one of the key main source of risk at the economics school and whatever, right? So, and yet maybe people who are 30, 40, 50 years experience in banking, they didn't really see to stress your bank for 100 basis points of rates movement. The same was for pension fund in the UK. So it's really about the fact that when you are in a certain environment, it's very difficult to extrapolate yourself and think, oh, what about interest rate move 300 basis points? It's so unthinkable after 10 years of depressed interest rate that you just don't think of it, and then where the problem started. So it's really about risk management in the end of the day, and I do think that although this time it is different than 2008, it's not going to be as bad, and the regulator now have the tools and mean to be able to step in. It's still going to be challenging, and I think we cannot expect that all this stress is going to just be resolved with a magic wand because one bank is buying the other bank. The stress is still there in the system. It will take a while to be digested.
Right, and one of the, I suppose, results of these bank failures is we've seen, some very rapid, overnight almost consolidation in the banking sector. But we've also seen mergers and acquisitions between banks and investment platforms. So, for example, JP Morgan buying Nutmeg, UBS at least was planning on buying Wealthfront before that was cancelled as well. Given how far valuations have fallen in fintech and finance in general, together with the macroeconomic environment, are we likely to see more such deals, big banks teaming up with, technology-first fintech investment platforms?
I think there will be, although there is going to be slightly different deals than I'm buying a very high-priced asset because of its growth. It's more going to be I'm buying a very low-priced asset because of its technology. So it's going to be a different dynamic also because the music has changed also for banks, and I think that's the argument. So I do think we're going to see more consolidation. It's not necessarily a good thing in my opinion, because ultimately I think we're here to try to create a different business model that can last, but I do think that is going to necessarily happen.
Okay, so we will watch this space. But it's time now, Giovanni, for our round of rapid fire questions. Are you ready?
Yep.
Okay, so I'm gonna put 90 seconds on my phone countdown clock. Just one word answers from you is all I need, and we'll try and get through as many of them as possible. Okay? Okay, so I've got 90 seconds on my countdown clock. Just one word answers is all I'm after from you, and we'll get underway. So, away we go. Question one, what fintech segment besides yours has the biggest potential over the next 5 years?
Payment.
What is the biggest pain point in your everyday financial life that you'd like to see resolved?
More cash.
Are we at the beginning, middle, or end of the fintech wave?
Beginning.
Do you have a metaverse strategy?
No.
Do you think regulators in the EU and US have kept pace with all the new possibilities and behaviors we're seeing in the financial industry?
Not even close.
How would you describe non-fungible tokens, NFTs? A scam, B, an interesting concept, or C, a part of the future that we really don't want to miss out on?
An interest concept being used as a scam.
Have you personally ever invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
Yes.
On a scale of 1 to 10, where 10 is the most likely, how likely is it that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank? Out of 10.
Likely. 6.
That CBDC, central bank digital currencies, will become a mainstream reality in the US or EU?
Shall we reply that?
Yeah, no, you can reply. We started so we can finish that one.
Okay, no.
So that's a 0 for you.
Sorry, no, I would say it's a 5.
So I'm afraid we're out of time for our round of rapid fire questions and also for our conversation. So I just want to thank you, Moneyfarm's co-founder and CEO Giovanni Daprà, for joining me today. Thank you.
Thank you for having me.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. See you next time. Bye-bye.